greetings in this fine week. Now let's see what market has brought us last week and what we could expect from next week. Well, long story short, there is nothing particularly interesting in there because last week's no-farm payrolls, I would say, was nothing out of context as such. And what's the best way how to analyze that is to look at market reactions. And if we only look at 4-hour S&P chart, there is no market reaction as such, because if we would look at just slightly higher time frame, in 4-hour time frame, which is actually nothing, we could see that where is November 29th. Here is November 29th. You see, for these days I have to actually scroll it out. This is last week. Markets did nothing. There is nothing interesting and absolutely nothing worthwhile to mention. Only the fact that historically markets are getting really resilient to interest rate hikes, and which is only says one thing: you shouldn't listen much to what people say in the news, but focus on actual prices. So markets are flat, holding their near all-time high levels, at least in S&P and in Dow Jones, but not about technology, because technology is not suffering having their best days, but that's another story. And interestingly about oil, yes, oil did slight rebound from previous lows, but still they are at very depressed levels if we take in context what's happening. Russian oil sanctions and energy supplies are not that bad to particularly market, that would seem, because otherwise we will have like $200 oil, but as I have always said, that's not sustainable. So we are at least with American oil, we are at levels which are seen at late 2021 still. And whether this rise from 73 to 81 is correction to a larger downtrend which started at middle of this year, or correction to new trend, well, it's too early to say, but I wouldn't be surprised if oil continued to hold at these levels for some time, because if oil should have to be higher, it would be higher for a long time, but clearly this is not the case. So small rebound from previous fall, but that's nothing worthwhile, and I don't think you have to pay attention for that. And here's more interesting thing. Yes, euro has risen and dollar in broader terms has fallen across all major currencies, but I will simply show you the euro because that's the largest pair, but the pattern is similar everywhere. Dollar is getting weaker, and I could give you one diametrically inverse market for it. I think this was the current term for it. I don't know. These are treasuries, and this is treasury yields for 10 years. So this is benchmark for interest rate world. We could see that they have peaked in early November at 4%, which is rather high actually. And guess what? This is corresponding to the strongest dollar in recent time. So they are inversely correlated, which is obvious. Now, I should tell you how this works. Bond yields inversely represent bond prices, which means that higher the bond yields, lower the bond prices. Lower the bond yields, higher the bond prices. So here you will have the bond prices which are lowest in quite a bit of time. Yes, yields are high, prices are low. I think I didn't misspell it, and that coincided with strong dollar. Well, which would kind of make sense, because people probably would like to flock for these kind of assets, and effectively flocking for dollar, because here's my theory. People have many theories here about how bonds work and whether the bond market will collapse, and because no one's buying treasuries because Fed is selling them and whatnot. But I honestly don't think that makes much sense in the long term, because bonds are pretty steady, pretty strong asset, and you wouldn't want to neglect it in this high interest rate environment, because if you combine this level of yield with safety of principal, which could treasuries provide, this is not actually the worst thing to own. But I will probably make this video about bonds and bond impact to global interest rates and economy a bit later. I will surely do that. Now I'm just saying that you could see inverse correlation between strength and weakness against dollar and bond yields, which is historical pattern. But nevertheless, this is what has continued for last months, but now has slightly accelerated. Namely, yields has fallen and dollar has fallen as well. And now we have a Bitcoin market which is, I should say, diametrically opposed to treasuries, and here we still have nothing. Dollar is ranging around $16.5 thousand ever since FTX crashed, and it has lower bound to around mid 15,000, and now it's testing 17,000 levels. Whether it will rise, I don't know, difficult to say, but all crypto market is pretty much dead, so no impacts here. And I wouldn't actually bother to say news about next week, because firstly there has nothing interesting, and secondly, if you are watching my videos for some time, I hope you are trying to get my point that it's not particularly useful to see what will the news show us, because most of the time it will say nothing. If there are some real news and real impacts, most likely this is the one news which are not priced into market, and then they could show huge reaction, as it was with FTX, as it was with the debacle of British pound and British treasuries due to mismanagement of their government. And if those news will happen, I surely will cover them. But if they are not, let's not waste our precious time. So stay tuned, wait for my next videos, and make sure you are following me. Bye.